Hey, what is up, my guys? Caleb here with another video. I'm bringing you today the three stocks that I'm buying right now that I'm picking for this week in April. Just to clarify, these are all buy and hold stocks. Planning on holding most of these from 6 months to 5 years. Just building my long-term portfolio with these three holdings. I'm going to plan to update this list of stocks that I'm buying on a weekly basis, whether or not I actually buy the stock, if I have the funds to do so or not. So yeah, without further ado, let's get right into it. My number one pick for this week is SMH, which is the semiconductor sector of the S&P 500. As you can see, this sector is market cap weighted. Its biggest holding is Taiwan Semiconductors, as well as Intel Corporation would be its second biggest. It only has 25 holdings in this ETF. But it has been pretty much steadily leading growth of the S&P 500. The S&P 500 is up about 5.8% year to date, and this is up 6.5% year to date. Analysts at Zacks Investments do rate this ETF as a strong buy, and it does not have a lot of risk. Its beta is actually only 1.19, which I find about the perfect amount of risk and volatility, as well as potential growth that I would want in most securities that I would be holding for that period of time, 1 to 5 years at my age as a young investor. I'm not viewing very many industry risks with this product because semiconductors are things that we're always going to be needing. They're in pretty much every electronic device that we have. So all these semiconductor companies, they have huge customers like Apple and Microsoft that are always buying their semiconductors for computer components. So it's a very stable but yet fastly growing industry. And it just really seems like you can't lose. And even better than that, right now it is on the perfect little maybe like 8 or 9 day dip to get some cheap shares. My second pick for right now is the Guggenheim Strategic Options Fund, and this is a bond fund, or I guess maybe it's it's an option fund, but they're using options to buy bond contracts, and they buy these contracts for smaller governments and smaller corporations that they have a lot of faith in long term. And they buy options 20 to 30 years out, and when they appreciate, they pay out that money as a dividend. So right now it is paying an 18.2 cent per share dividend every month. But just like a really strong uptrending growth company with a dividend yield that's that large is something that I've been looking for. I feel like most of the high dividend yield companies I've had have had a lot of trouble maintaining a healthy corporation, a healthy balance sheet, and a healthy income statement while they're paying out so much of their earnings to investors. I think the upcoming 5 years actually have more potential for larger returns than the past 5 years had. I think that these options that they're trading look very solid, and it's such a diversified portfolio. They have 94 holdings of different options contracts that they're adding to or trading. The last time I checked, and like the biggest one was weighted at 3%, and then under that it was like weighted at like 1.5% or something. So very diversified, picking a lot of different option contracts. One of the other things that attracts me to this stock is being an investor with a small account. I like the lower price. Most ETFs and large cap stocks are like at least $60-$80. So it's nice to know I can have some stake in this without locking up my whole portfolio for the time that I'm holding it, which again will be most likely 6 months to 5 years. So my third pick here is a value pick, and actually it's a undervalue pick where I believe this company has been massively undervalued. Analysts at Zacks Investments actually also rate this stock as a strong buy, which I think is dead on, and it actually has very low volatility for a very cheap, almost penny stock. and very small market cap. But this stock has actually done incredible on its income statement, on its balance sheet. As you can see, its P ratio is only 6.944. That is just absolutely incredible. Every single year, this company is producing 1/7 of its total market cap. So potential for growth because of that is really large. It definitely has had some issues that most stocks its size and with its market cap would have with volatility in the past. But right now, it actually has an extremely low beta. Um, it's like 1.06, so it really doesn't fluctuate a lot. I also think you're getting this stock right now at a pretty solid discount after this 1 week drop. No news really supporting this small downtrend over the course of a week. Just normal fluctuation. As you can see, it's only 1.39%. Back to its income statement and balance sheets. It has produced revenue growth from 2015 to 2016 at a year-over-year increase of 35%, and along with that, 9% earnings growth for that year. And that's not just 15 to 16. It has such strong and exponential stable revenue and earnings growth. If you look all the way back to 2012. But anyway, guys, those are my 3 picks right there. The market vendor semiconductor ETF, the Guggenheim Strategic Options Fund, and Meet Me, which is a social media site, by the way. Didn't think I got to that.